It's all about the future of something we use every single day, but probably rarely think about in terms of how it actually works: our money. Now, we're not talking about some dramatic economic collapse here. Instead, we're looking at a quiet, almost completely invisible revolution that's shaking up the financial world. So let's explore exactly how the very foundation of global finance is shifting right now.
I want you to just imagine waking up one morning and realizing that the way you've used money your entire life has quietly changed. And not because of some massive crisis or a stock market crash, right? It started quietly, with legal decisions and tech upgrades most people never even heard about. But to really get why this matters to your wallet, we have to look at the actual technology driving it.
Section 1. Okay, let's dive right into this and figure out the basics of digital cash.
So, to put it super simply, a stablecoin is a type of digital money that is specifically designed to remain, well, stable. Unlike other digital assets that wildly fluctuate in value all over the place, one stablecoin is intended to stay worth exactly $1. It's not magic either. These coins are actually backed by real reserves or financial mechanisms designed to hold that steady value. Basically, it's digital cash.
Think about this compared to something you probably already know a bit about: Bitcoin. Bitcoin is famous for being a total roller coaster. One day it's soaring, the next it drops thousands of dollars, which is thrilling if you're a day trader, sure, but imagine trying to just buy a $20 lunch. By the time your payment actually processes, your crypto could be worth $18 or maybe $24. Obviously, no business wants that kind of stress. Stablecoins completely strip away that volatility. They give you the cool tech benefits of digital money, but they act exactly like predictable, boring, reliable cash.
Section 2. Bank, traditional versus stablecoin. Let's compare how these systems actually stack up against each other.
To really see the difference, let's put ourselves in the shoes of someone trying to send money internationally. Say you need to send $500 to a friend on the exact opposite side of the world. Just look at the friction involved here. First, you initiate the transfer, but then it bounces through a bunch of intermediary banks. You get hit with high wire fees, the exchange rate fluctuates while you wait, and you might be waiting several business days for it to finally clear. If you send it on a Friday, you are entirely at the mercy of weekend banking hours. It's incredibly frustrating.
Now compare that massive ordeal to sending a stablecoin. That exact same transfer, it can happen within minutes, or sometimes literally just seconds. The transaction costs are significantly lower, too. And because it moves directly across the internet on a blockchain network, it operates 24/7. There's no waiting until Monday, no bank holiday slowing you down. It is just your money, moving instantly and efficiently.
For a lot of us, sure, that's just a really nice convenience. But for millions of people around the globe, especially folks dealing with slow, unreliable banking systems or freelancers constantly waiting on international payments, this level of speed and cost efficiency is absolutely life-changing. Small businesses can finally receive global payments without losing a massive chunk of their hard-earned cash to hidden fees. It truly opens up a borderless economy.
Section 3. Let's talk about Florida's recent decision and why regulation matters.
Whenever you're dealing with a technology that is this disruptive, you absolutely need rules. It just can't operate in the shadows. Recently, Florida approved a legal framework for stablecoins. Now, I know that might sound like dry, boring government paperwork, but as the quote reminds us, history doesn't begin with a headline. It begins with a law. Years from now, we might look back and realize these initial regulations were the foundational moments for mainstream digital money.
So why does this legal certainty actually matter so much? Well, regulations like the one in Florida act as really essential shields. They're specifically designed to prevent money laundering and criminal activity. They protect everyday consumers from fraud. They give businesses the legal certainty they desperately need to actually start adopting this tech confidently. And they provide investors with the stability required to fund even more innovation. You simply can't have massive everyday public adoption without very clear rules of the road.
And keep in mind, Florida is not acting in isolation here. Lawmakers all across the United States are intensely debating this, while globally, governments are actively experimenting with their own digital currencies. It's basically a race. The countries that figure out this legal framework first are going to gain a massive advantage in global commerce. But of course, this rapid global race leads to a very natural anxiety about the future of finance.
With all this disruption happening, critics often ask the big question: are stablecoins going to completely replace traditional banks? The short answer? No, definitely not. Traditional banks really excel at complex services that stablecoins just don't provide right now. Things like securing mortgages, getting business loans, and offering personalized financial advice. Stablecoins, on the other hand, excel at the sheer mechanics of moving money.
Instant transfers, low fees, global borderless reach. They basically serve two very different but equally important needs.
Because of this dynamic, the real consensus among experts isn't about total destruction of the old system. It's all about coexistence. We are looking at a future where traditional finance and digital finance gradually merge together. Pretty soon, you might just be using your familiar, trusty banking app, but it's quietly utilizing stablecoin technology behind the scenes to settle your international transfers instantly. You get the absolute best of both worlds.
You know, the biggest financial revolution in our lifetime is likely going to happen completely invisibly. Think about email for a second. You don't really care about the complex routing protocols happening in the background, right? You just want your message to arrive instantly. Money is heading in that exact same direction. Look at the internet, or smartphones, or artificial intelligence. At first, they all looked pretty ordinary, maybe even a bit niche. Today, we literally can't live without them. Stable digital money is following this exact same quiet path into becoming completely indispensable.
Which leaves us with one pretty profound question to wrap up this explainer. What will the financial system of the future actually look like? The future of how money moves, and honestly, who controls it, is being written right now. Through quiet laws and steady technological leaps, the invisible revolution has already begun. So the only question left is, how are you going to navigate it?